What's going on, y'all? It is Tuesday evening. We made time for the post-meal walk. Enjoyed some delicious 100% grass-fed ground beef, a couple eggs, and I finally found this raw kefir brand. Forget who the brand was from, but it was from this store. It's a really popular store called Sprouts. And so I finally found one out here on this side of town. And man, I was happy. But really, I found it on the way to a meeting that I had with a older gentleman who I likely would work with at some point in my life in the near future. He's a broker, right? And so that's pretty much what I've been in line with in my field of work for nearly 8 years, is in financial consulting, if you will, retail banking and so forth. But you know, it comes time where, you know, you got to continue to dig in your career path and make sure that you're growing. And so just met with him about that. I got to learn a lot from him. Middle-aged gentleman. He's old enough to be my father, from New York. I don't know if he has some Eastern European background. And man, we just shared a lot of great insights. I think we share a lot of the same values and similarities, but he's just, you know, near 30 years my senior, or so, or I would say 20 years my senior. So what I'm going with this is I just want to share that I'm excited, because you should always be looking to continue to develop and grow, especially if you're looking to try to increase your earnings. And because it's all a race against time when we have inflation happening all around the world, and the middle class and majority of people around the world are falling deeper and deeper into poverty. Jobs that are available are mostly, I mean, especially where I live here, or I'm staying rather, is retail. If it's not a high-paying, skill-specific job, it's going to be majority retail or some type of service. So it's a great wealth divide happening before our eyes, and we're seeing that. And so this is why I think as far as career-wise, I've always been in the right field, but it's time to kind of gear it a little bit towards the next level, because there's so much capital flowing through the 1%'s hands and through their coffers and through their inheritance and trusts and so forth, that you know, if you're anything commission-based, you're gonna eat very well from it. So it makes sense at this point to, you know, look at licenses and so forth. Anyways, but I digress. Let's get into it, guys. I wanted to talk a bit about my meeting, because we talked about investments. He's been investing for a while. He has a lot of assets and so forth, antique cars. He was investing in the stock market back in '87 and the early '90s. So he's not a boomer, but a late Xer. So he was just happened to be, you know, living in a time where wealth was the greatest. You know, some big time wealth has been generated. You know, he has a couple of homes, so forth. So he's probably well in being a millionaire, and you know, he's like a licensed financial advisor. You know, so but I got a lot of wisdom from him. I did ask him, of course, about Bitcoin. What was his thoughts? Because he said he was into tech. He says he could have got into it when it was a certain price, about $1,000, but he did not understand Bitcoin. But he understands so much, which didn't surprise me. He didn't understand Bitcoin, but it let me know at that moment that for a guy that smart, his experience, his life choices were pretty good when it came to picking the right stocks, seeing Amazon early when it was in the 90s and knowing to buy it. But you know, he doesn't really understand Bitcoin at all, and this is why he doesn't put his money into it, which I respect. You know, a lot of people go into this cryptocurrency market not understanding and just wanting to go for riches and try to gamble, then they don't take the time to learn what Bitcoin is first. And so it right then at that moment, it let me know that we're pretty much very early. We're very early. We are so early, guys, that what I would consider him to be is part of the 1% or 10% of in the US. I guess if you're 10% in the US, you'll be considered 1% globally. So US dollar is pretty strong, and you know, and US assets or assets in the US are strong. Even these folks don't understand Bitcoin still. And so BlackRock and these guys, they're ahead of the race. They're beating everybody to the punch, because for these types of brokers, these types of institutions like Fidelity, BlackRock, Charles Schwab, all the likes that have these ETFs, it's almost like they're getting out in front of something. And for them to have the setup ready, they have these research teams, they have these forecasters, they know what is going to be coming. They're not going to put all this money behind getting these ETF approvals and not understanding that these ETFs at some point are going to be used. So this is pretty much what I'm gearing towards right now. We are very, very early, y'all. Bitcoin at $57,000 today, July 9th, is a bargain. When you know you may not have front ran the institutions, but you are still front running the 1%, a lot of the 1% in the wealthiest country on the earth, I say act accordingly. Act accordingly, guys. This is not a drill. This is nothing to play with, because when this market starts to move, these wealthy people will start trying to jump in. These financial advisors, such as the person I'm speaking on, will start to mention, or will have his clients inquire about, what's this Bitcoin about? What are these ETFs? And he's going to have to answer that. Now, if he allows me to join his firm, then, that will be what my knowledge base would be. But who knows, maybe by that time, I may not want to work, because we got ahead of this. We got ahead of the BlackRocks, the institutions. We also have got ahead most of, I believe, in America, some of the top or the wealthiest Xers and boomers. Where all the money is concentrated right now is with those older generations, because they have the assets, right? They have the assets, they have the trust set up, the homes, the savings bonds that are now, that have went up in value, and now they're paying about 7% on a bond, or 5% face value. So this is something, guys, I'm telling you, if there's any opportunity, Bitcoin is the opportunity. And what most people will do is they'll wait until they're given the green light or the permission from these types of investment advisors who don't understand. They'll wait till they understand it and then present it. But by that time, so much cost, the cost benefit is just, it's almost, at that point you're just gonna, I can't even get it out. You're just gonna be storing your value, and you're not gonna get the rest of this, I want to say, appreciation out of it. Well, honestly, Bitcoin is built to continue to appreciate, because there's no cap on how much this money is going to be printed from fiat currency. There's no cap. So Bitcoin is mathematically built to be finite, deflationary in its monetary policy, and scarce. So anyways, I just want to share that with y'all. I'm gonna keep it under 10 minutes. Man, check out the links down in the description if you're acquiring more Bitcoin, guys. Check out hodlhodl.com, non-KYC Bitcoin. You want to get that. Also check out the wallets down below. Trezor has a New Trezor 5 coming out, and they got other wallets that are really good. Cold Card has a Bitcoin only wallet. And check out my book down below. I written about 4 years ago to help family and friends understand Bitcoin a little bit better. I'll get at you guys next time. Peace.